Wall Street's holiday cheer ended abruptly on Friday, with all three major indexes closing lower in a broad-based sell-off. The Dow dropped more than 0.75%, the S&P 500 shed more than 1%, and the Nasdaq lost about 1.5%. The sell-off thwarted the seasonal Santa Claus rally, in which stocks traditionally rise during the last few days of December and into the start of January. But that's hardly surprising given the stock market's recent Trump bump, said Carol Schleif, chief market strategist at BMO Private Wealth.
I think you could argue that we saw a lot of Santa Claus rally going into the election and certainly coming out of the election with the decisiveness that it was seemingly settled. And so there could be a lot of that going on. You've also got any time that you've got fewer participants in lighter volumes, concerns can push around. And there's a lot of folks, again, a lot of headlines you're seeing around people frightened about the tariffs that are coming in and not understanding. And now the immediacy with which that's facing people, especially in a lighter volume market with fewer people manning the trading desks, can lead to some of that where you've got people that are saying, look, 5% in cash is an okay place to be until this thing sorts itself out in a few weeks.
All of the Magnificent Seven stocks tumbled Friday, with Tesla leading the group's decliners for the second day in a row, dropping about 5%. Shares of home health service provider Amedisys added more than 4.5%, its best one-day gain since July, after extending the deadline to close its $3.3 billion merger with insurer United Health. And shares of Lamb Weston climbed 2.6% after a filing showed activist investor Jana Partners is working with a sixth executive to push for changes at the French fry maker, a move that could result in a majority of the company's board being replaced.